Isn't that fascinating? Most altcoins this week went down, but Hemi more than doubled. The question is why? Who's actually buying here? Who's selling here? Let's have a look at the on-chain metrics, the data most people are not looking at, to figure out how much longer this rally could potentially last. Now, it's not just this week that has been good for Hemi. In this month, the price went up by more than 700%. We are currently at more than 15 cents. Hemi is a layer 2 smart contract platform built on top of Bitcoin. And while the total value locked number that's advertised on the website, 1.2 billion, does not correspond to what's on DeFi Llama, it's still a project worth looking at. Because here's the thing, the capital that's on the chain is very much fluctuating, but the usage of the platform is growing quite a bit. Because it's not just all about capital, it's also about the stable coins, so that's now close to 60 million, and it's about the app revenue, which is close to an all-time high. And the recent increase of the app revenue might be also a secondary driver for the recent price movements. Now it's Tokenomics 101, that price discovery is about demand and supply. The question is, how will the supply of Hemi tokens develop over time? Because tokenomics are very important for altcoins. If the supply grows too quickly and the demand doesn't grow in line with that supply expansion, then the price is a very hard time outperforming. Now there's different ways to look at data points like this. At the face of it, it's always great when projects raise money. So in this case, 15 million for a growth round. And support by the likes of Binance, so YZI Labs, sounds like a very good thing as well. But that then begs the question, at what point in time will those venture capital investments actually pay themselves out? Because that's always the risk. Once retail arrives, the retail investor might be the exit liquidity of the professional investor. This is actually a real danger for the Hemi token. Have a look at the circulating supply. It's currently at 977 million, but the maximum supply is 10 billion. So less than 10% of the supply of Hemi is currently in circulation. The supply will 10x at one point. And where is the supply going? We've got the community and ecosystem, that's 32%. We've got the investors, that's 28%. We've got the team, that's another 25%. And we've got the foundation with another 15%. So really, the retail investor and the users of the platform only have 1/3 of the supply. And then there is the danger of constant selling pressure of the insiders and the early backers. But right now we are still very early in the process. So far on the Ethereum chain, we've only got 993 holders. And when we look at the number of holders that have at least 6,600 tokens, so at the current price, it's roughly $1,000 worth of the token. This is recently going up sharply, but there's really only 80 wallets with at least $1,000 worth of Hemi. So there's not much price discovery on chain. There are only 12 wallets with more than $10,000 worth of the token, and there's only 3 wallets with more than $100,000 worth of the token. And so because of that, there's pretty much no action on the Ethereum chain directly. All of the price discovery happens with the centralized exchanges and the market makers. In the last 24 hours, we saw 200 million worth of trading volume on Binance in the liquidity pool versus Tether. But at the same time, we saw 1.3 billion worth of trading volume in the futures market. So that's now the levered bets on the price. So really, it's leverage that's currently determining where the price is going. It's not transactions on the blockchain. Now, most people are betting on rising prices of Hemi most of the time. There had been a bit of a short squeeze over here when there was more short investors than long investors. That directly led to a short squeeze. The price jumping again by another 60%. So this is the power of the market makers. This is what happens when Binance owns a lot of the supply and not much is happening on chain. With that short squeeze, of course, the open interest temporarily went down, but now it recovered again. But have a look at this. There's 40 million worth of open interest, so of bets on the price, while the market cap is only 150 million. So really, the perpetual futures push the price in either direction. And it seems like a straightforward thing to just bet on falling prices when the supply over time will 10x. But it's not as straightforward when currently the attention is so high and when enough people bet on falling prices. So really we have to always do the opposite of what the masses are doing. When too many people are betting on falling prices, then there's a short squeeze, then the market makers buy up the token. When there's not so many people anymore betting on falling prices, that's when the price can gradually deflate again. But I think we are very far away from this because open interest still continues to go up, and there is a correlation between the price of an asset and the open interest in that asset. The more bets there are on a certain asset, the higher the spot price tends to go as well. Have a look at this. This is the trading volume of Hemi, and really the price, I believe, will only deflate once the trading volume comes down as well. There's simply too much attention on the asset now. Very long term, over the next years, I do think that the token will underperform Bitcoin and Ethereum. But short term, there's simply too much hype, too much attention. It's not a good idea to now bet on falling prices of Hemi. It's a better idea to rather buy in because still the market cap is comparatively small, especially relative to the total value locked. That's because of the token dilution, but also relative to the growing app revenue. We did see a first short squeeze. We did see some people getting wrecked with betting on falling prices. Here's the short liquidations. But I think it's the best to choose among two strategies. The first one is to just use a trailing stop loss. So we buy into Hemi in the hope that there's more short squeezes in the future. And we simply just adjust the stop loss as the price continues rising. And then when it stops rising, we just get stopped out very quickly and take the profit. That's strategy number one. Strategy number two is to simply wait until the rally is over and until trading volume comes down again, and then potentially bet on falling prices. But it's better to do so when the market cap is much larger, at least at 500 million, better at 1 to 2 billion. Because most of those hyped tokens, they tend to turn around somewhere between the market cap of 2 billion to 6 billion. But of course, we are very far away from this for Hemi. So there's still definitely quite a bit of upside. We do another 2, 3, 4x. Binance has a very tight grip on this asset. And there is of course an incentive to increase volatility, to increase attention, to get more retail investors to buy into the token. Now here's the problem with investing in this market. There's in general two major forces that impact the prices. On the one hand, we've got the macro environment. Where is Bitcoin, Ethereum and Solana going? Then on the other hand, we've got whatever happens idiosyncratically to a specific altcoin. Now the problem is most people can't make constant gains because most people aren't really segregating among those two influences. So if you're just riding the macro environment, you can just go with Bitcoin, right? You can buy whenever the current price is below the realized price. Whenever we are below the average cost basis of the market is historically the best time to buy. Of course, currently we are very far away from that. But in general, approaches like this work quite well to time the macro. Or we can even go a bit more complex. We can use things like the CBBI indicator, an indicator that aggregates all kinds of other models. And it also shows us pretty well when we are potentially expensive or potentially cheap in the market. The reason why those indicators are great for macro timing is because it tells us how much we should potentially be invested in crypto. We should have very high allocation over here, maybe 30, 40, potentially even 50% of our entire net worth in crypto. And we should have the exact opposite when we are up here, right? Maybe only 5 to 10% of our net worth in crypto. So we can always adjust based on models like this, and we can play the macro. And for the macro, we can just go with Bitcoin because Bitcoin tends to outperform most altcoins most of the time. So that's one approach to make money in crypto long term. And I think that's the most straightforward, easiest approach for people that just start out with everything. But then there's also the approach of higher risk, higher reward, of using the altcoins. But this is now the Bitcoin price that we see at the top. What we now see at the bottom, that's the altcoin market cap. And just have a look at how similar those lines look. When Bitcoin is going down, the altcoins go with it. So even if you take the best altcoin on the market, even if you figure out that the fundamentals of project A, B, and C are the best and that they are doing long-term better than the rest, if Bitcoin goes down, if Ethereum goes down, then the best altcoins go down with it. And that's the problem. There are times when everything is going up and there are times when most things come down. And it seems like the asset selection doesn't matter as much compared to timing the macro environment. But then again, we are back to just trading Bitcoin. If you want to just get macro exposure, we just might as well buy Bitcoin, buy and sell Bitcoin. So really, we want to find a way to bet on an altcoin without the macro environment. We want to neutralize the macro environment, and we just want to bet on the outperformance or the underperformance of a certain altcoin. I'd make the argument that it's actually easier to bet on the underperformance of an altcoin. Because have a look at the altcoins in the last year. Bitcoin, of course, in the last year almost doubled, and the vast majority of altcoins underperformed that, right? We've got 1, 2, 3 altcoins that did similar to Bitcoin, maybe a bit better, but the vast majority did worse than Bitcoin in the last year. And for some altcoins, that happens rather consistently. This is Balancer relative to the others market cap. So how is the Balancer token, a decentralized finance protocol token, doing relative to all other cryptocurrencies? And it's going down consistently. Now, the reason why this is going down is fundamentally driven, as in there's more and more tokens that hit the market over time. There's a high token inflation, or the tokenomics are not that good. Here is the Balancer tokenomics over time. We started out with 20 million tokens, and now that went up all the way to 70 million tokens. And that then has this long-term underperformance as a consequence. And so I like to take advantage of market inefficiencies like this. I like to bet on falling prices of Balancer relative to, for example, Bitcoin. Because then we can turn around this chart. This chart turns into this chart here. This is now Bitcoin relative to Balancer. So we bet on rising prices of Bitcoin and on falling prices of Balancer at the same time. And we get this return curve over the years. So in the last 12 months, this went up by 186%. It actually did outperform buying and holding Bitcoin. And that's better than any straight altcoin pick over here, right? Among the small risky alts. None of them did that performance in the last year. And I also like how constant that performance is. Compare this with the Bitcoin price, right? Bitcoin during that time did go down by 77% at one point, right? The drop from 70K all the way to 16K. This relative ratio did not have those fluctuations. Here is the logarithmic scale, and the maximum drop from top to bottom was 50%. So we are appreciating faster than buying and holding Bitcoin, and we do this with less fluctuation over time. It's a better risk to reward. That's what we all should be aiming for. More return with less volatility. I'm following this kind of strategy already for 4 years roughly. Had I just dollar cost average into Bitcoin, I would have gotten the return indicated by the gray line. But because I also bet on relative valuations, on things like Balancer going down over time, I got the return indicated here as the black line. I understand it's not as straightforward as just buying an altcoin. There's a bit more complexity to it, but that's why I created dedicated videos on this. And I want to make this as easy as possible. So here's the idea. You simply watch 2 videos over here that explains the entire strategy, how to execute a relative valuation trade. Once you've watched those 2 videos, I will send you my favorite trade. So that favorite trade is very similar to the Balancer token trade. It's going long Bitcoin, Ethereum or Solana, and it's going short the altcoin that tends to go down over time. Here are the 2 videos. It's using perpetual futures to bet on relative valuations, and it's risk management with relative valuation bets. In total, it's roughly 1 hour worth of content. So just watch those 2 videos, and afterwards, after you've joined the community, I will send you my favorite trade that performs very similarly to this chart here. And so here's the offer. If you do not make any money with that trade after holding it for only 1 month, then I will refund you the membership fee, no questions asked. So simply just send me a message. I will just refund you the $125 per month. If you do make money, of course, with that trade, then feel free to just continue copy trading me. Because I will not just share this one trade, I will of course share every trade that I do myself as well. A link to Premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in Premium. Cheers.